Good day and welcome to Financial Booklet. I'm your host, and this is your financial market update for Saturday, December 27th, 2025. As we move through the final days of the year, investors and analysts are reviewing the data from the holiday season and positioning for the year ahead. Today, we are breaking down the latest reports regarding artificial intelligence trends, significant developments in the commodities sector involving sovereign debt, and specific updates from the gaming and industrial sectors. Let's get straight to the facts. We begin with the broader market sentiment. Following the recent holiday activity, data has emerged regarding consumer spending habits and their impact on the Nasdaq and Dow indices. Reports published today highlight a continued focus on volatility within the technology sector, specifically regarding the integration of artificial intelligence. Analysts have released data concerning how AI implementation is driving revenue metrics for major tech firms. This comes alongside updated figures on general consumer behavior, with retail tracking showing distinct patterns in spending volume as the fourth quarter draws to a close. The focus remains on how these revenue figures align with earlier volatility metrics observed earlier in the week. The core question being asked is whether the revenue generated from new AI products justifies the stock price fluctuations we've seen. Observers are closely watching to see if the holiday sales figures will provide a solid foundation for tech stocks as we head into the new year, or if the market will remain cautious due to the persistent volatility. The data suggests that while AI is a significant growth driver, its path to consistent profitability is still being mapped out, which is a key factor for investor confidence. Shifting our attention to the global stage and commodities, there are new developments regarding precious metals and sovereign debt. Reports circulating today indicate increased attention on the silver market. This interest coincides with released data regarding the geopolitical and debt landscapes in specific emerging markets, notably Venezuela and Nigeria. Financial observers are currently documenting how these international debt dynamics are correlating with movement in the precious metals sector. The connection here is one of risk and safe haven assets. As concerns about the stability of sovereign debt in certain regions rise, investors traditionally look for alternative stores of value, while gold is the typical go-to. The current reports highlight a notable uptick in interest and trading volume for silver. Analysts are dissecting whether this is a short-term reaction to specific geopolitical news or the beginning of a more sustained trend where silver acts as a more accessible hedge against emerging market instability. The data is tracking not just the price movement, but also the flow of capital into silver-backed financial products and physical holdings, which could signal a broader shift in risk management strategies among global investors. Moving into corporate-specific news, we have updates from the industrial and entertainment sectors. First, regarding Fluor Corporation, new data highlights the company's current standing with institutional investors. The reports detail the company's cash position and its project backlog, providing a snapshot of its operational scale heading into the new year. This information is crucial for understanding Fluor's health, as a strong cash position allows for flexibility and resilience, while a robust project backlog suggests future revenue streams. The analysis is particularly focused on how institutional funds are positioning themselves with respect to Fluor stock, which can be an indicator of long-term confidence in the company's management and strategic direction. In the entertainment sector, the gaming industry is seeing renewed coverage regarding platform performance. Updates have been released comparing user engagement metrics across major ecosystems, including Steam, Xbox, and the PlayStation 5. The data tracks how the PC and console markets have performed relative to one another during the recent high-traffic holiday period. These reports go beyond just sales numbers. They look at active user hours, in-game purchases, and subscription service retention rates. This provides a much clearer picture of which platforms are not just selling hardware, but are successfully creating sticky ecosystems that keep players engaged and spending. The comparison between the PC-centric Steam platform and the console giants is especially relevant as it shows where the most dedicated and monetizable gaming communities are congregating. Finally, we look at the broader economic indicators impacting diverse asset classes. There is fresh analysis regarding the bond market, specifically tracking current yields and their relationship to dividend-paying stocks. With yields at their current levels, investors are weighing the relative safety of bonds against the potential for higher returns from equity dividends. The latest reports examine which sectors offer the most attractive dividend yields when adjusted for risk, and how this dynamic is influencing capital flows between the stock and bond markets. Alongside traditional fixed income discussions, reports have also covered recent movements in the cryptocurrency space. While not a major market-moving day, the analysis points to consolidation patterns in key digital assets and discusses the regulatory conversations that are expected to be a major theme in the coming year. Additionally, new studies published this morning address the current landscape of retirement planning. These reports outline the risk factors currently affecting long-term investment horizons, analyzing how inflation, data, and economic growth metrics are influencing retirement portfolio modeling. The research emphasizes the need for dynamic strategies that can adapt to changing interest rate environments and inflationary pressures. Financial advisors are using this data to stress test existing retirement plans and recommend adjustments to asset allocations to better protect long-term purchasing power for their clients. The studies serve as a timely reminder of the importance of regularly reviewing and adapting one's investment strategy as economic conditions evolve. That wraps up your market update for Saturday, December 27, 2025. We will continue to monitor these stories as more data becomes available. Thank you for tuning in to Financial Booklet for your factual market report. We'll see you in the next video.